Hey everybody, we've got new rules and new contribution limits for 2025. So let's review all of them. We got to make sure everybody knows how and when they can put money in these special savings plans. So let's start with the work-based plans, the 457, 401k, and the 403b. Your new contribution limit for 2025 is 23,500. If you're over 50, get an additional $7,500. And 2025, we kick in this new special 60 through 63 catch-up provision of $11,250. So if you're 64, it's only 7,500. If you're 61, it's 11,250. All right. Then we've got 401As. Those are special little 401As there, 70,000 contribution limit there. Defined benefit programs, $280,000. Big dollars you can put into those. Those are things like pensions and other variations of pensions. Just so you know, the 457B has a special pre-retirement catch-up program. Effectively, it doubles your personal contribution limit. And the 401A, 401K, 403B plans, maximum $70,000. That includes employer-employee contributions. So you are limited to 23.5, but you can put 70,000, including employer contributions. So a lot of big limits there that allow you to move as much money as you can. Now, let's talk about Roth accounts, your own personal Roth accounts. There are lots of rules as to whether you can put money into Roth. So the first part is the limit. The limit's $7,000 for 2025. And if you're over 50, you can add an additional $1,000, making it $8,000 as your contribution. Okay. What you have to understand about this is that you have to qualify to put money in to Roth this way. So you must have enough earned income to cover the deposit. Meaning, let's say you're retired, but you have a little part-time job and you make $2,000. Maybe, whatever it is, you show $2,000 as a W-2 income. Because earned income is W-2 wages, or self-employed profits. Let's boil it down to those. Those are the simplest ones. You can only contribute $2,000 in my example. So if your W-2 says you made $2,000, you can contribute $2,000. You can't contribute the full $8,000. If you made $10,000, you can contribute $8,000. So you have to have enough earned income to cover the deposit. No age limits. There is no age issue with Roth. That doesn't hold you back. And then deposit before your tax return due date. So April, you have to have it before April for the previous year. All right. There's also income limitations. All right. So here's the thing. If you are single and you have less than 150,000 income, you're allowed to deposit into your Roth account. But you start making more than that, there's a little window where there's a partial calculation. And then once you make over 165,000, you cannot contribute to Roth. And then they do the same thing for married couples. If a married tax return has 236,000 or less, then you can contribute. Both of you can contribute. Then you get the phase-in window, and 246, you cannot contribute at all. We go to IRA money, and we have a whole different set of rules here. So you have to be careful if you're making deposits into your IRA. The way this works is you're allowed to do the same 7,000 plus 1,000 catch up if you're over 50. You make a deposit into your IRA, and then what you're supposed to do is go write it off on your tax return. But if you didn't meet the rules to be able to put it in there, you're not going to get it written off, which means you paid taxes on it once. Now it's sitting in an IRA, and you're going to have to pay taxes on it again if you don't get this fixed. So, must have enough earned income, no age limit, deposit before you file your tax return in April. So, here's the difference on the income section. So I want you to look at this. This is so important to understand this part of this. Okay. So for single people, if you have a work-based plan, meaning a 403b, 401k, even SEP IRAs, all those kinds of things, the self-employed plans. If you have 79,000 or less income, you can certainly contribute to your IRA on top of those work-based plans. But you make more than that, you're not going to be able to contribute, or you can contribute, but you're not going to write it off on your taxes, effectively forcing yourself to pay taxes on it twice. I see a lot of people making this mistake. Please, please, please don't make these mistakes. I've seen year over year over year, very smart people make deposits into IRAs and they weren't able to take the deduction on their tax return. So that's money you've already paid taxes on. You put it in a pre-tax status, but never got it pre-tax. And to unwind that, it's a disastrous mess. Most people end up paying taxes on it again, and nobody wants to do that. So don't make deposits unless you meet these rules. Married couples, okay? Without a work-based plan, but spouse has a plan. So the person contributing to their IRA has no plan at work, but their spouse does have a plan. They get a family income of 236. Okay, so if your income's less than 236, you can deposit into the IRA for the spouse that does not have a plan at work. Now, for the spouse that does have the plan at work, they limit the income further to 126. So the one trying to deposit in the IRA, if you have a plan at work, your income limit as a married person is 126. If you don't have a plan at work, the income limit's 236. Now, hopefully you noticed something here. If you're married and don't have a plan and your spouse does not have a plan, so nobody has access to a work-based savings plan, then you get to deposit into your IRA regardless of income. Same thing for a single person. If you have access to a work-based plan, you have income restrictions. But if you don't have access to a work-based plan, you can contribute to your IRA without question. Okay, very important we understand these rules. These mistakes are very costly and painful, and they're very hard to undo, especially later, years later when you realized you weren't supposed to be doing it. All right, I hope that helps everybody. Give us a call, shoot us an email, subscribe to our channel. It is Planning Before Investing. We got over 250 videos, new videos every single week. Yourinvestmentcounselor.com if you want to meet with me for any reason or anyone on our team. FPFEAZ.org if you want to find our full form classes. We do them every single month live via Zoom. You can register for those classes at FPFEAZ.org. Thank you all, and we will see you next week.